Volatility is coming, and the indicators clearly show it. Are you curious about which direction Bitcoin's price will go in the near future? Stay tuned. Hey there, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. We meet and take a look at the charts from three different perspectives: technical, on-chain, and fire charts. And that means you won't find such condensed analytical knowledge as we serve here anywhere else on the web. Thank you for appreciating it. We've surpassed 61,000 subscribers. This is definitely thanks to you. But at the same time, I know that nearly 35% of regular Kanga Trends viewers don't actually subscribe to this channel, so now is the perfect time to hit that subscribe button, leave a like, turn on the notification bell, or at least drop a comment, even a contest entry. And remember, the content in this material absolutely does not constitute investment advice. For advice, consult a licensed advisor or just do what I do, conduct your own research. So if you acknowledge that, grab your coffee and let's get started with the analysis. As usual, we'll start our analysis with the Bitcoin chart. So let's first check what exactly has happened on the chart recently. First of all, the ninth downward candle from the TD sequential indicator nicely highlighted the rebound point, the price bottom for Bitcoin. And since then, we've been in an uptrend. We had a period of consolidation here. This consolidation took place around $112,000 as well as the 100-day moving average, which is our yellow line. Ultimately, it was broken through. After another day, the 50-day moving average was also broken. As we can see now, this 50-day moving average is being tested from above, or rather, it was tested from above on Monday as support. A very bullish signal because the 50-day average, historically, here, and here many times, it has proven to be an excellent bounce point for the price, especially during upward trends. However, we can see that the volumes are declining. Here, we only have an example from one exchange, but I've already checked several others, and I see that this trend repeats itself. The volumes on the exchanges are unfortunately declining. And this unfortunately contradicts the potential pattern you might notice here, the inverted head and shoulders, where here we have one shoulder, here's the head, and here's the other shoulder. Theoretically, we have a very nice pattern forming here. A breakout from this could potentially lead to a new ATH for Bitcoin. Well, an ATH could be reached anyway, but it definitely won't be through this structure we see here because this is not a head and shoulders pattern that could be considered legitimate. Moreover, it's worth paying attention to what's happening with the RSI, and the RSI is behaving in a very favorable way for us because we can see that the 50 level has been broken, and currently the RSI is oscillating around 60, 59, 60, exactly within this range, and it has room to, in the event of a potential drop, test the 50 level, that is the boundary between bulls and bears, from above, meaning as support. This is basically a behavior that often occurs in cryptocurrency markets, and not just in crypto, but in financial markets in general, and here it is also somewhat expected. Besides that, it's worth mentioning what's happening with the historical volatility index because we brought up historical volatility last week. We talked about how Bitcoin's volatility here is dropping below the level of 15. As we can see, despite this slight breakout that took place here, these levels, the area around these levels, are still being maintained, which means that from this area, most likely, we can soon expect increased volatility. In which direction will this volatility go? Taking into account the longer term, because we have to assume a longer time frame here, and also considering the fact that the RSI is oscillating well above 50. I have not the slightest doubt that Bitcoin is in an upward trend and that it will maintain this upward trajectory, which does not change the fact that in the short term, price fluctuations may occur, and these price fluctuations will certainly appear right at the moment this material is released. Why? Because at 8 p.m. Polish time, a decision will be announced in the United States regarding how interest rates in the US will be shaped in the near future. Economists' predictions are that there will be a 0.25% cut, so relatively little. Considering that Bitcoin is currently in an upward trend, I would expect a sell the news reaction here. I suppose most of you expect the same. However, 4% of surveyed economists believe that the interest rate cut will be 0.5%. As we can see through the lens of this result here, that would be a surprise for the market. If that turns out to be surprising for the market, then Bitcoin could soar from the current price much, much higher, possibly towards at least $120,000, maybe even towards the all-time high. Do I expect that? Well, not really. I'm prepared for the scenario where Bitcoin breaks out higher from here right away. Nevertheless, I would still expect that there will be a 0.25% interest rate cut, which could result in Bitcoin, once again in the short term, very short term, basically within minutes after the decision is announced, experiencing spikes both up and down. Here, volatility will be very high, but a bit later, it will probably try to test the 50-day moving average once again. Will it break through it? There is rather little chance that it will fall lower, although I do see such a possibility for myself. But here it's more about my long position, which I'm setting up. And basically, let's move on to that now. On my Twitter, if you're not following yet, you definitely should, as I very often share exactly what trades I'm making on the Kanga futures market. And in this case, for Bitcoin as well, I have my position set up, which is located around the 100-day moving average. Here is a tweet where I shared exactly at which point I placed my position a few days ago, but I also noted that this position will move upward along with the 100-day moving average. At the moment, this 100-day moving average is hovering around $112,865. And I would expect, in the event of larger price fluctuations and Bitcoin's desire to draw liquidity, that there will be deeper drops here, which will pull liquidity from this area, followed by a rise in Bitcoin and a close. Prices above the 50-day moving average. What would happen then? Basically two things, because at the same time, the 100-day moving average and the support at the $112,000 level would be defended, and at the same time, the momentum would also be maintained, since the price would close, as I mentioned, above the 50-day moving average, which would give the prospect for Bitcoin to rise at a later time. Why am I playing my position this way? First and foremost, it's because I'm using 20 times leverage. Using 20 times leverage means I don't want to set my position too shallow because it could be wiped out very quickly. Let's imagine a situation where Bitcoin breaks through the 50-day moving average and moves lower. I could automatically have a stop loss set there, or my position could simply be completely liquidated because of the price fluctuations that would occur. However, by using the 20-day moving average at this depth with such a steep moving average, I can quite easily, though it's still unlikely, have my order filled and very quickly move into profit. This is my strategy. You don't have to agree with it. In fact, I encourage you to develop your own strategy and to play according to your own rules and your own analysis. So to sum up, in my opinion, a 0.25% interest rate cut will not bring significant volatility to the chart, at least not in the short term. But let's also remember that there are several planned, or rather anticipated, interest rate cuts this year, and as a result, the price of Bitcoin will naturally trend upwards. It might just happen in a somewhat calmer manner. However, if today's rate cuts are higher and amount to 0.5%, then in this case, we should expect a significant breakout. And now, the fire charts for Bitcoin, although in this case, we'll start our analysis with CBD, meaning who is currently buying Bitcoin. And as we can see, these lines, our colorful lines representing different wallets, are really, really flat. Here we can see the whales, which is our brown line, and for about the last 24 hours or so, it's been rising slightly. I know it's hard to see here, that's why my cursor is following it, so you can spot it. The whales are buying a little, but these aren't aggressive purchases. Besides that, we can clearly see that these lines are, as I mentioned, flattened, which means everyone is waiting for the interest rate decision. So how does the order book look during this time? It's worth taking a look at our blue line, which represents the price of Bitcoin, and the sell volume lines, if they are above the blue line, and the buy volume lines, if they are below the blue line. Of course, the brighter they are, the stronger they are. Let's start with the sell volumes. Here we can see that around $118,000, the first significant volumes appear, but they only amount to a dozen or so $1 million in Bitcoin, waiting to be dumped on the market once that value is reached. And these orders are distributed quite evenly every $1,000. As for buy orders, starting from the current price, or actually a bit lower, from around $115,500 down to $110,000, we have broad buy clusters, but with relatively small amounts. What could this mean? It could mean, for example, that if there are any major price turbulences, the price of Bitcoin could drop very quickly and basically stop at any of these points. And then I suspect it could also rebound quickly, because in this case, I see a chance here that a very large price wick could simply be pulled down, which, for example, could trigger my long order. Ethereum, on the other hand, is currently in a consolidation phase, which is very nicely confirmed by the volumes. We saw a breakout to the upside, and currently there's a wide consolidation range stretching from just over $4,100 to just under $5,000. This is the area where Ethereum is currently moving. The volumes confirm this for us very nicely. The RSI is behaving very interestingly. It finally bounced off the 50 level. Here we had a rather soft action around the 50 mark at this boundary. It's a bit concerning to me, but fortunately there was a rebound, and we can see that currently Ethereum is dropping slightly on the RSI, testing this level a bit more aggressively from above. There's still a bit of room left to reach it, so here as well we might see some slight declines, a touch of this level, and then a breakout afterwards. It's worth noting that the indicator is currently divergent. On Monday, it lit up the 8th consecutive bullish candle, which could have suggested either a local trend reversal or simply a continuation of the consolidation. And basically the consolidation is continuing, but the indicator has been reset, it's now healthy. As a result, Ethereum has room to make bigger moves. What would I expect in the case of Ethereum? If there is a drop, then the 50-day moving average is the area that I find attractive for buying Ethereum and possibly entering a long position. The 50 has already been confirmed, for example, at this point, so it's quite a valuable rebound, which in fact may simply continue to be confirmed. My long position so far has been placed around the $4,000 area because I see very strong support here that could still be activated. However, considering that this is the second level of support, which is quite far from the 50-day moving average, almost 6% away. So I would rather expect that I'll simply reconsider my order and perhaps move it a bit higher, right around the 50-day moving average, and from there I'd look for a rebound. And if I decide to make such a move, I'll definitely let you know about it on my Twitter. And now Ethereum on fire charts, and here we basically have a situation that's almost a copy-paste of what's happening on the Bitcoin chart, starting of course with the CVD. So we have a situation where all the lines are relatively flat. The orange line, which represents retail investors, is now on a slightly stronger downward trajectory, which may indicate that retail investors are currently the least interested in the market. As for the whales, our brown line, they are positioned high here, but this is also a line that has been relatively flat for the past 24 hours. So we can see that in this case, purchases are not progressing. Order distribution. We also don't see any clear order distribution. We simply see that the market is waiting. The altcoin chosen for today is Chainlink, simply called Link. Link has basically been on an upward trajectory for a very long time. We already talked about its growth potential when it was around $12. Well, Link managed to break out to nearly $28 and is currently in a consolidation phase. This consolidation somewhat resembles exactly what Ethereum is doing right now. We can also see very clearly that Link is finding support at the 50-day moving average, which is our red line. This support was confirmed here. The area around this support was caught here, and currently Link is also heading towards this value. As for my predictions, what I expect here is that once again, Link will try to bounce off the 50 and break upwards. In fact, my long order, which I also mentioned on my Twitter, I placed on Link quite some time ago, actually a few days back, when it was in a local upward trend. I mentioned that the area around the 50-period moving average is where I would be placing my order, and it will also move upwards along with the moving average. Since then, we've seen declines, and indeed, Link is trying to reach those areas and perhaps bounce off them. We'll be watching closely. The volumes remain in decline, so we can see that this is clearly a consolidation phase, and we're waiting for some signals that could trigger a bigger move. And the RSI is currently at the 50 level, so basically right on the border between bulls and bears, which can be a bit dangerous because a breakdown could occur here, but be careful. It's worth remembering that the RSI refers to the closing price, not to the so-called price action. Intraday during the day, which means that even if Link drops here to the 50-day moving average and then closes its price action around the same levels where it is currently, the 50 level on the RSI will be defended. If it is defended, then in this case, we have a very good chance that Link will move higher. But looking at fractals, although I am not a fan of fractals, I have to point this out, this current price action and its pattern is very similar to the pattern we observed here, where there was also a breakout from the 50-day moving average, an upward move, a very similar consolidation to what we see here, and then a break of the 50-day line. It's true that there were basically 3 bearish candles here, so a bit fewer. Here we can see more of them, so the chances of a rebound are somewhat higher. But it's worth remembering that this is a warning sign, and it's simply important to talk about both the advantages and disadvantages of Link when discussing exactly what's happening on its chart. In any case, I'm currently bullish on Link. I see a chance that there will actually be a rebound from the 50-day moving average and that my long position will be triggered. And now Link on fire charts, and here quite a lot is happening because we can see a whole range of support zones stretching from $23 down to just over $22. So here, specifically, the $22.30 area, well, basically, that's the vicinity we're talking about. That's right around our 50-day moving average. So I'm absolutely not surprised that buy orders are appearing here. In fact, they could be triggered in the event of any potential turbulence. As for sell orders, the first ones appear around $25 and then higher up, basically around $26. And here we see them clustered quite densely all the way up to around $28. Interestingly, on the CVD, the patterns are theoretically similar to what happened with Bitcoin and Ethereum, meaning we have a total flattening here, but there is one line that stands out. And that line is our orange line, the one that represents retail traders. And note, at this moment, retail traders are buying Link. What could this mean? Well, maybe it's altcoin season, at least from the perspective of retail traders. If you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Browse through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be Kanga itself. Third, it can't be any kind of Bitcoin. So you know what to do. Let me know in the comments which crypto you'd like to see in the next video. It's time for a review of spot Bitcoin ETFs in the United States. And here, there's a lot of optimism. First of all, let's note that for the past 7 days, purchases have been ongoing. These purchases, in terms of their volume, are quite similar to those we observed from April until mid-July. Here we can see very high volume bars. And then for the subsequent 2-month period, we basically experienced a significant flattening of the price action, with the incoming buy and sell orders being in roughly the same amount, which means that the period of consolidation we observed here was therefore completely justified. Now we are seeing purchases again, strong buying, although in the last 2 days the buying has been on a slightly smaller scale. But as we mentioned, that's not surprising. We're waiting for the interest rate decision. It's time for on-chain analysis. And today I've prepared 3 very simple metrics for you. The first of these is the amount of stable coins in circulation. And as we can see on this chart, basically since November 2022, when the price started to move upward and we still didn't have an upward movement in stablecoins here, let me remind you, the indicator line is the orange line. We had a continuous downward trend. However, starting about a year later, in October 2023, we see an upward trend. And this upward trend is constantly gaining momentum and getting stronger. What could this mean? If the amount of stablecoins in circulation on the cryptocurrency market is increasing, it mainly serves the purpose of buying Bitcoin or other cryptocurrencies. So, as we can see from this indicator, purchasing power is constantly increasing. Time to debunk a myth. Many times while browsing the internet, I've come across claims that retail investors are not entering the Bitcoin market at all, and therefore we shouldn't expect any growth. This is absolutely untrue. All you need to do is look at one chart, which very clearly reflects what is actually happening right now. I'm talking about wallets with a balance holding any amount of Satoshi. Of course, from these wallets, we could separate out the larger ones. I've already done that, but in any case, let's take a look at what's happening on this chart. After a long period of consolidation and essentially flat movement, we can see that from the end of July until today, we've been on an upward trajectory. This upward trajectory may not be very dynamic, but at the same time, we can see that new all-time highs are being reached here quite often. New all-time highs on the indicator that shows how many cryptocurrency wallets currently hold any amount of Satoshi. And such an all-time high on this indicator was reached just 3 days ago on September 14th, so it really looks good. This is an early signal that retail investors are indeed entering the market. After all, we are looking for early signals, not late ones. Therefore, as for whether retail investors are present in the market, I personally have no doubts. The upward trend is still ongoing. There are also charts where we expect a downward trend. This is also beneficial for the market. Here we're talking about the Bitcoin balance on cryptocurrency exchanges. We have this chart right in front of us. That is the Bitcoin balance on the largest crypto exchanges in the world. And we can see that basically from the beginning of July to the beginning of September, we had an upward trend, which means that during this time, sell-offs were taking place. Very often, wallets that basically hadn't been touched for many, many years were being activated. Currently, we also aren't hearing about those wallets, and at the same time, the Bitcoin balance on exchanges is starting to trend downward. This is a very good signal, because if the balance is decreasing, the price can actually rise. This is exactly correlated with what we are currently observing on the price chart. Additionally, it's worth noting that if this trend continues, we will be heading toward reaching this year's lows, so it looks very promising. And besides that, we might even reach multi-year lows, the ones that were basically hit at the end of 2002. So if that happens, in my opinion, the price of Bitcoin will also rise significantly. It's time for a contest, so let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it can be Bitcoin, Ethereum, or Chainlink. Present a technical, on-chain, price chart, sentiment, or fundamental perspective, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment posted by Friday at midnight will receive 20 KNG from me. And the winners, attention, for the last 2 episodes are Sławek Jeszczot and Kajan8863, who basically analyzed Bitcoin. Sławek, I know you posted a comment under episode 59 of Kanga Trends. Unfortunately, we didn't see that comment. Thank you very much for reaching out to us. And in this way, I'd also like to remind you to check whether your comments are actually visible under Kanga Trends, because sometimes Google's algorithms, or in this case, YouTube's algorithms, for some reason basically delete those comments or cause them to be shadow banned. If you want to take part in the contest and be sure that your comment is actually participating, make sure to check that it's really there. So congratulations to the winners. Please contact support to claim your prizes. That's all for today. If you enjoyed it, and I truly believe you did, and this is your first time here, be sure to subscribe and join me again next week. And please rate this episode on a scale from 1 to 270, where 1 means it was bad and you do not want to see me here again, and 270 means it was fantastic and you want more of this. If you want more of this, then see you next time.